If you're new to investing, then you're in the right place. This channel follows my investing journey from complete beginner and is designed to help give you the tips that you need to start your own investing journey. Investing can be a really confusing thing to get started in, especially as you're parting with your hard-earned money. So knowledge really is power. In this video, I answer 10 quick-fire questions that all beginners should know before investing to give you the confidence to get going yourself. Let's jump straight in. Before we get started, if you do get any value out of this, please do drop a like on the video and consider subscribing to the channel to keep up to date with all of my future portfolio updates and investing tips. What is a stocks and shares ISA, and should you invest using one? An ISA is essentially a tax-free wrapper, meaning that any investment made is not subject to capital gains or dividend tax, whereas any money invested outside of an ISA could be. It might not seem like an issue now if you're new to investing, because you can realise up to £12,300 of capital gains per year tax-free and up to £2,000 of dividends per year tax-free. But over the lifetime of an investment portfolio, these figures will easily be surpassed, meaning that you will have to pay tax if you're investing outside of an ISA. So put simply, yes, if you have an opportunity to invest using a stocks and shares ISA, you should definitely do it. How long should I invest for? Investing is a long-term game, and if you are starting, you should be prepared to lock that money away for a minimum of 5 to 10 years, probably more. This is to account for any market fluctuations that could impact return, and to allow the compounding effect to have the maximum opportunity to take hold on the investment over time. For this reason, you should not invest any money that you cannot afford to lose, or any money that you think you'll need in the next 5 to 10 years. Index funds versus ETFs. An index fund is designed to track the components of an underlying index, for example, the S&P 500. But then, of course, so is an exchange-traded fund. So what's the difference? Essentially, they are incredibly similar products. ETFs are considered far more flexible, with them being traded on the stock market throughout the day, whereas index funds are only priced at market close. Put simply, ETFs are lower cost and more tax efficient than index funds. So ETFs are a great place to start out if you're new to investing. What is a dividend? A dividend is a distribution of a company's profits to its shareholders. This is one of the perks of holding individual shares in profitable companies. You're entitled to a share of the profits. Dividends can make a really nice addition to your portfolio, giving you active income, meaning you can buy more individual shares. Some top dividend payers out there are Coca-Cola, BAE Systems and Realty Income, but I'm just playing favourites because I hold all three of them in my trading 2-on-2 portfolio. What is income versus accumulation? These are two terms that are often used to describe exchange-traded funds. Like companies, ETFs also distribute dividends, usually quarterly throughout the year. If an ETF is labelled as income, the dividend will be paid directly into your investment account as cash for you to decide whatever you want to do with it. This can be reinvested, which is obviously advisable, or it can also be drawn down as income for you to fund your lifestyle. If an ETF is labelled as accumulation, the dividend will automatically be reinvested back into the fund, thereby increasing the value of each unit of the fund. Remember, if outside of an ISA, dividend income may be taxable, so this can get quite confusing if you're investing in accumulation funds rather than income funds. Can I lose money investing? Yeah! Any money invested within the stock market can of course go up as well as down, and that is why you should not invest any money that you cannot afford to lose. History would suggest that if you leave your investments for long enough, they will always bounce back, but past performance cannot predict future returns. So please don't invest any money you cannot afford to lose. This was one of my major concerns when I started to invest, but by investing in ETFs and things like the Life Strategy on Vanguard, I diversified across a wide range of different geographical locations and industries, thereby reducing my overall risk. Do I need lots of money to start? No, the barrier for entry to investing has never ever been so low as it is right now. You can invest from just £1 on trading 2-on-2, once they open their doors, or £2 on free trade. I've got links down in the description below for both trading 2-on-2, again, once they open their doors, and free trade, which will entitle you to a free share valued worth up to £100 or £200 dependent on the platform, which can be a nice kickstart to your investment process. Nice. Alternatively, if you are planning on investing using the Vanguard platform, you need to either save up £500 for a one-off initial investment, or commit to investing £100 via direct debits for the first few months of holding the account. Therefore, a lower barrier for entry would be to invest via the Vanguard ETFs using the free trade platform. Is it too late to start? Again, no. Granted, it is better to start at a younger age, but it's better late than never. I started investing at 27 and I've already grown a portfolio that I'm really proud of in just 3 years' time. What platform is best to invest? In all honesty, it depends entirely on what you're planning on investing in. Personally, I started investing via Vanguard because it gives excellent diversification for a novice to investing, so it made me feel really safe in my investment decisions. If you want more control, again, Trading 212 or Free Trade are excellent places to go. They've got some nice sign-up offers that you can take advantage of, and they offer a really wide range of different products, both ETFs and individual stocks and shares, for you to get your teeth into. The risk here is you could get stung if you don't know what you're doing by investing into a company which hasn't got very good fundamentals. Equally, if you do invest in individual companies, you've got to be aware that these could drop substantially overnight, and you've got to ask yourself if that's something you could stomach, because if you're going to sell out at the first sign of something dropping, you're never going to make money in investing. The name of the game is buy and hold for a long period of time. If you're investing in crypto, actually don't do that if you're brand new, or at least be very, very careful. Coinbase Pro can be a really good place to buy your crypto if you're looking to get around the crazy fees that Coinbase charge, or eToro can be one of the good places to go for just simplicity, but more on that in the future. Essentially, it's all about what works best for you, and by considering what you want to invest in and what your investing goals are, this should help you decide on the best platform for you. How much money can I make? Investing can make you rich, but over a long period of time. It's not going to happen overnight. Yes, there are of course people out there who invested in Bitcoin or Tesla when it was less than the price of a Freddo bar. But let's be honest, if that's you, you wouldn't be here now. With consistent investments over a matter of years, dependent on how much you invest every month, what products you invest in, the rate of return that you get, and what age you started at, you could easily develop a portfolio worth over £1 million. If you're investing right up to the age of retirement and started right at 18, you could surpass 1 million by a long way. But of course, you've got to ask yourself, is there any need for that if you can retire and live the rest of your life doing exactly what you want without the need of saving and investing any more money? I hope you found these quick fire questions useful if you are new to investing. There really is no better time to start than today. Well, perhaps yesterday. If this video has helped in any way, please do drop a like on the video and drop a comment below if you've got any more questions on investing. Consider subscribing to the channel for all future updates on my own Vanguard, Trading 212 and Coinbase portfolios. And with that said, I'll catch you in the next one.